Welcome to this edition of Stock Market Pulse. My name is Eric, and today is Sunday, January 10th, 2016. And real quick, I'm releasing my 2016 trading plan this week. And if you haven't signed up yet, be sure to go to the website at stockoptionassassin.com, and I'll send it to you in the next couple of days. So that's actually one of the things I've been working on. I took a little break in December from putting out any new YouTube videos. We're doing a few things to the site, and adding the trading plan is a big piece of that. So I know it's been a few weeks since you've heard from me, and man, what a crazy start to the year. The first week of the year, it's like the worst in 80 years. There's a bunch of stats probably floating around there. They're having I think they had a market special, turmoil in the markets. You got a lot of things going on. North Korea, a lot of geopolitical things. Saudi Arabia and Iran are in a tiff again. What's that going to do to oil? I mean, there's so many things that are happening. It's no wonder that the people are kind of ringing the register here, taking their money out and kind of just sitting on the sidelines. And one of the things in my trading plans actually talks a little bit about this, where one of my four main types of positions I'm going to be in this year is cash. I actually went heavy cash in December, not because I thought this was going to happen. I just did that because that's what I had decided to do. And I was going more delta neutral, which worked out pretty well until the beginning of the year. And then I had some trades that I ended up out of, the first week of the year I got stopped out of. But December actually did pretty good. But now it's like, now what? That's always the question, right? So what I'm doing, right, that's the only thing I can do is tell you what I'm doing, is keeping an eye on the market. We do have January options expiration next week. I know it seems like it's kind of early in the month, but it is the third Friday of January, so there's 5 days left to expiration. We'll see what the futures look like tonight. Are we going to sell off? If we were to sell off pretty hard the first 1 or 2 days, call it Monday, Tuesday, down into, let's just say it's 190 on the SPY, I would actually be looking to be a call buyer of SP, and I would just look at, you can look at the NASDAQ and, the IWM, maybe, probably the NASDAQ might be a little better than the Russell, but, I'm okay with just trading the spiders here. And what I would kind of cut down to is either a 2-hour or 4-hour chart. And one things I like to do is, let's kind of look at a hypothetical trade here. So if we go to the 4-hour chart, let's just agree real quick that we are oversold on the daily chart, right? So that's important to note. So when I switch down to a 4-hour chart, and let's go to the option chain, I'm looking out the next month, and I would go, and remember, this would be a trade that's very, it's high risk. Looking for, a 1 or 2 day bounce. So for me, I'm okay with trading out of the money options with the idea I'm only going to hold it a couple days, because we're at 40 days to February expiration. That means theta is not really going to hurt us for a couple days. So I would look at something like the 198 calls, a low delta 30 call option. And I'm going to right click this, and I'm going to send this to my red chart. So now I go to the chart, and now I can actually see just that option. So I'm looking at the 4-hour chart, and we're very oversold. So like I said, if we were to sell off earlier in the week, at some point we're going to get this little movement, right? And remember, we're under the impression that we're at oversold on the daily chart. So you're not going to want to take every single signal, especially on a 4-hour chart. But given the fact that we're oversold and we have an OPEX, potential options expiration bounce, then I think I would pick up some of these calls. Right now they're trading for 275. So we'll see what the market looks like. And so what I like to do on Sunday is kind of look at what the week's going to do and have a little bit of a plan, right? So you say, okay, if we sell off, I want to do this. If we open up just flat, then maybe I don't want to do this, or maybe I do. I'm actually okay. If we open up flat tomorrow and the 4-hour starts to sort of turn up, then maybe we buy the call options here. I would use about a 30% stop, right? So if you get in for, let's just call it $3 or something, I would put a stop at $2. That's my risk. And if I get stopped out, I'm done. And then I'm actually trying to make that same amount of risk. So if I'm, we'll call it a 30% stop, I look for a 30% gain. So if I get in for $3-ish, and 30% gain would put us at $4, right? So if you look at that, it's really just a movement back, back up to the band here. It's not the right band settings for 4 hours, but anyway, you get the point where, basically since we're over, and we'll look at these on the daily chart if you want to, the options oversold. Let's go back to the spiders. So the spiders oversold on daily chart. I think we get an OPEX bounce. What I don't know is when that bounce is going to be. Now, if we're rallying tonight on the futures and the futures are up 1% because China does something to calm their market, or all of a sudden there's some kumbaya in the world in North Korea or something, then the market's going to rally, and I'm probably not going to chase it. I really just want to try to get a good entry for this short-term OPEX bounce, right? So that's what I'm looking for heading into tomorrow morning, right? If we open up relatively flat or even sell off, I look for the 4 hour to turn up on the SPY 198 call with a 30% stop, looking for a 30% gain or more. I can trail my stop on that one. So that's really kind of a short-term mindset. I know a lot of you guys aren't there. Longer term, and this is kind of I mentioned this in my trading plan as well. Some of the longer term stuff that I'm trying to do is you look at dividends and things like that, and some of the biggest dividend kind of big name stocks. Let's look at those real quick. So let's go look at Chevron here, right? Now, Chevron scares me in the sense that it's so tied to oil that I don't think we're near the lows. If oil rolls over and dies, Chevron's going to roll over, die. And being the trader, I don't like. I know this would be a dividend play. I still don't like the fact that if the dividend isn't going to outpace, if I get in at $80 and it goes back to 70, dividend's not going to save me, right? So I like CVX Chevron as a dividend play, but only if it kind of gives up the ghost again. Now, obviously, if oil's put in a bottom, then maybe that changes my perspective on that a little bit. This does not look like a bottom, and I don't know where this thing's going to end, right? So I'm just looking at USO. I actually started a position in USO, and I'm kind of building that over time. So that's another longer term thing. But if you're looking for kind of a longer term play that you can sort of leg into, last week I picked up some Verizon, VZ, and I want you to just look at the chart for a second. If we just look at this, Verizon, I mean, it doesn't go anywhere, right? It's it's trading where it was in January of last year, right? Where it's like, was that $45, $46? It went up to 50. It came in, got caught up in the crash, kind of recovered. It's back at 46. So again, this thing really isn't doing what the market is doing. It's not breaking out the new highs. It's not putting in a head and shoulders. It's not completely breaking down. So it's kind of just trailing along, treading along to the side. We do have some earnings coming up, but this is something I'd actually be willing to hang on to. The dividend is just over 5%, and I started a starter position, which means I'd be willing to sort of leg into this. I got in for 40. It was, I forget exactly. It's like maybe it was about 40. It was about $45. It was like a high 44 and change. So, again, I'm not really worried about my directional gain here. This is more of a dividend longer term play. And yes, if let's just say it was 45. If it goes back down to the lower 40s, right, call it 42, I'd probably pick some more up, and eventually you have a nice dividend paying stock that you can sort of sit on, and collect those dividends over time. So that's kind of what I'm looking at. It's like super duper short term, right? Like a couple days reversal, and then kind of a longer term dividend. Right now, the 1 to 2 week swing trade thing is really, it's really hard to see what's going to happen here, right? So we've had this huge sell off. Let's go back to the spiders. We've had this huge sell off. We're back into a congestion area where we were at earlier in the year, August, summertime. So we could probably bounce around in this level. That's why I'm kind of looking for that reversal. But to say that we're going to be break new lows, I don't know if that's going to happen. I don't know if we're going to be rally back up here. What I do know is that the short term swing trading, in the sense of 2 weeks or so, it's really hard to predict. But I'm willing to take chances on a oversold bounce for 1 or 2 days, get out, reevaluate, and then maybe do an overbought short, right? So I'll be posting something like that maybe later in the week. So that's what I got for today. Don't forget, go to stockoptionassassin.com, get my trading plan. That's going to be released. You'll be getting an email about that in the next, let's say by the end of the week. And then I will see you guys at the next update.